Happy New Year, everyone, and welcome to the 2023 State of the Real Estate Market with Bob Diamond. Today, Bob will be covering not only the state of the real estate market in 2023, but also what will happen with house flipping, apartment investing, tax liens, deeds, and real estate investing in 2023. And most importantly, what to do in 2023 to maximize your income so you can leverage the recession in your favor and thrive while everyone else is trying to survive. Bob has been through 3 recessions and market crashes as a real estate investor and an attorney. He knows how to profitably navigate through times like these, and there is always opportunity in every market, and often the best opportunities to follow turbulent times. It's quite valuable to have access to a mentor that has been through 3 market crashes, and you're definitely going to learn a lot about what Bob is going to share with you today. Now, if you're not familiar with attorney and investor Bob Diamond, which I would find it hard to believe, but I want to take 60 seconds and introduce him to you. Bob is known as America's tax sale attorney because he is the original and most trusted educator of tax sale overages. He has bought properties at tax sale, invested in tax liens, and he is definitely the leading expert and educator in tax sale overages. Tax overages are also called surplus funds and excess funds. They're all the same, and the different names just depend upon which state the tax sale is held. But no matter what the name is, they all represent the same thing: money left over after a tax sale and an opportunity for you to make a lot of money helping people who lost their homes at tax foreclosure get that overages refunded to them. Bob teaches people how to have their own tax overages business, and some of Bob's graduates have gone on to start their own overages education businesses. But just so you know, if you want to get the true information from an attorney who practices the overages business every day, Bob Diamond is the only one with a legal and business background in this profitable niche. Not only does Bob practice overages every day, he also teaches regular people who are not attorneys how to have their own overages business where they help people and make a lot of money for themselves and their families, which is invaluable. So whenever I get a chance to learn from someone that is more successful and makes more money than I do, I take every opportunity to learn from them. The challenge is most wealthy people don't have the desire to teach others how they got wealthy. Bob is the exception to that, and we are fortunate that Bob is willing to teach others. Actually, he gets tons of satisfaction out of helping others. So the more overages he can recover from people that lost their homes to tax foreclosure makes him very happy and fulfilled, knowing he helped the family get back on their feet. But Bob is only one person, and with over 3,000 homes being foreclosed for taxes every single day, there's no way that Bob can help everyone who has overages due to them. And that led Bob to teach others how to help these struggling families that have lost their homes to tax foreclosure. He actually has built a very large team to support anyone that wants to start an overages business. On his team of 27 people, he has 4 finance MBAs, 2 people with master's degrees in psychology, 1 person with a PhD in psychology, and a legal team that helps recover the money. Bob has also done all the legal research on overages so that people that work with Bob and his team get the correct information so they can do the overages business safely, in compliance with all the state rules and regulations on overages. Now with the team Bob has built and the people he's taught the overages business to, he now has a much larger impact on the world by showing others to recover overages also. And when you recover overages, you help a family get back on their feet by getting them a sizable refund of money left over from the tax sale of their home, and you make great money for yourself and your family by getting a percentage of what you recover as a reward. It's a great win-win, helping people, helping business, and the people that love the overages business want a business where they can help people and make great money. And that right there is Bob's purpose, to help people, helping you build a profitable overages business by helping people get their money back. What a great win-win for you and the victims of tax foreclosures. And he's very proud of that. I mean, who wouldn't be, right? And with that, I formally introduce you or reintroduce you to America's tax sale attorney and leading overages expert, Mr. Bob Diamond. Welcome, Bob.
Hey, thank you so much. Thanks for the kind words and great introduction. So this is about you guys, and it's about the fear that I think many people are having right now, where when you look at the newspaper, you watch the cable news, you log into wherever you get your news on the internet, it's full of screaming at the top of their lungs hysterics that are frankly just meant to scare you, and most importantly, to scare you into tuning in tomorrow to see what's happening next. And I will tell you, there is bad news out there, but I will also tell you that this is all very manageable, and that the amount of control that you have over your own personal economy is far, far above much more than what affects you from what they do in Washington or what some bureaucrat does at your local level. What you can do locally to make your life better is far more powerful than anything that can happen, in the general economy. So the first thing I would tell you is don't be scared, but do shift gears. So, if you think about it, if you're driving a car, if you remember when we had cars that were manual transmissions, if you're going up a big long hill and your car was loaded up with a whole family full of people, you would downshift to the lower gear so that you could get up the hill more easily, and you'd easily get up the hill. If you tried to get up the hill staying in fourth or fifth gear, the car might even stall out and not make it to the top of the hill at all. But when you adjust, downshifting, when you adjust like you did downshifting driving up a hill, you can go perfectly fine. We'll get over this hill. But what you can't do is be an ostrich. You can't stick your head in the sand and hope that if you do the same things that you're always doing and the same things you've been doing, say, since 2012, which was when this latest good economy and run up in real estate prices started. If you think you're going to make money doing the same things you did over the past, say, 10 years, it won't work. It won't work any more than, if it was summer out and then you decide, it's now December 31st, you're in upstate New York and you're going to go out in your shorts and a t-shirt. That doesn't work. You're going to freeze to death. So in winter, we put on a coat. We change the way we clothes. We change the clothes we wear. And when the economy changes, we change what we do. So what I'm going to be talking about today is what to expect in the coming year and what to do. And I will tell you from the beginning, no one can perfectly predict what's coming up, because there are events that happen that come completely out of left field. And an example, latest example, we have Russia attacking Ukraine and essentially going to war. You couldn't have predicted that 2 years ago. You wouldn't have known when or if that would happen. Just no way to know those kind of events. Or COVID, for example, there was no way to know that was coming or the exact timing on it or what it would look like. So, you have to take any prediction with a grain of salt, knowing that, it won't be perfect. But what I can tell you is that in broad strokes, I'm sure that I'm right. And in broad strokes, I'm sure you will find that the advice I'm going to give you today and the talk that I'm going to give you will make complete sense to you. And I'd encourage you to not stick your head in the sand, but instead look around and see what the truth is. And when I think about, what helps make me successful in life and people that I know successful in life, it's really simple. It's looking for the truth of a matter and responding accordingly. It's not wishful thinking where, I wish it were this, but it's not. And then, sort of deciding based on what you wish it was or wish it would be. You want to live from reality. So you want to really identify what the truth of something is and act accordingly. So we're going to be talking about tax lien investing, tax deed investing, mortgage foreclosure investing, apartment buildings, house flipping. We're going to be talking about the overages business. And I want to talk to you about, what I'm sort of expecting to happen in each of those areas. And most importantly, what you should do as a practical matter. So the world has dramatically changed in the past year. If you and I were talking last year at this time, there was no talk of inflation. The Fed at that time said, inflation, no danger of that. If it was, later on in the year, they're saying, it could be transitory. And now, if we're here in 2023, and they've absolutely hiked interest rates like crazy. Mortgage rates have gone up this time last year about 2.5%. Now we're talking over 5%, so more than doubled over the past year. And that has huge impact on the real estate market, because the real estate market is a market that thrives and responds to the cost of debt. Because when people, for example, you take a simple example, when people buy a house, what do, especially a first-time home buyer? They go to a mortgage broker or mortgage banker or the bank that gives them mortgages, and they say, hey, we've got $100,000 a year in income or $200,000 a year in income jointly, and we have $50,000 saved up, and we want to buy a house. What can we afford? The mortgage person puts the numbers in their calculator and says, well, if you want a fixed rate mortgage, you could afford, a $300,000 house at today's rates. If you want an adjustable rate mortgage, you could probably go up to a $320,000 house. And that number and that buying price is based upon what the interest rates are, what payment that results in, and that compared to the person's income. So number one thing I'll tell you is that when interest rates rise, residential real estate prices will drop. There's no question about it. Anybody who tells you anything different is absolutely incorrect. I say they probably have an agenda that they want to say something different. Like the National Association of Realtors is predicting, as of today, there's an article, a 6.4% rise in the average cost of housing. They're the only ones that predict anywhere near that kind of rise. Most people are predicting a decline. And I can tell you, as a person that's been in real estate since 1989 is when I started learning about this and invested in my first property, prices are going to drop. They will drop because there will be less buyers who can afford the houses. So if you want to sell your house, then you're going to have to sell it for an amount that your buyers can afford. So that's number one. So National Association of Realtors is they need to stop being an advocacy organization. Maybe they can't. That's what they are. Their economists need to stop being advocates and start being real economists, because they are smoking crack if they think that's what's going on. So we are going to see house prices decline. And that brings me to a point you need to know about investing, and you really need to just think about this. When asset prices are falling, you do not want to buy that asset. Like, this is really simple. When prices are dropping, you don't buy more of it until the prices stabilize. And I'll give you an example from my own personal history. So back in 2008, of course, we had a real estate collapse. I personally had a lot to fight through on that. I was doing a lot of real estate development at the time. I had condo conversions going on, I had commercial buildings going up, vacation houses being built. There's all kinds of stuff going on. And the market fell out from under me. And I literally spent the next 4 years digging myself out from that and learning from that experience that, if it dropped and you think it can't get worse, it absolutely can get worse. So anyway, as I started working through that 2008 debacle, and shoveling money into projects, bringing them to completion, getting the market and sold, selling for less than I projected originally. And I got through all that process, and I noticed an opportunity in Las Vegas, of all places. And we were doing a conference out in Las Vegas, and I was looking at some of the real estate, and a friend comes to me literally shaking with excitement. He's saying, Bob, you got to see this. These houses that were $275,000, they're now going for $175,000. This is unbelievable. They dropped by $100,000. You have to buy them. And I was a little bit like scorched from real estate at that moment. So I was like, I don't know about that. Tell me more about it. I looked at them and I thought, this is not the time to buy because they're still dropping. And he said, well, they can't drop further. They already dropped by 100,000. And I thought, why not? Why can't they drop further? And you know what? They did drop further. And you know what they did? They dropped to $75,000. They dropped to $75,000 where you could go out. And I did this. That's why I know you can go out. I went out to Las Vegas. I used to go around with realtors. Let me just make sure it's not on my team. I used to go around with realtors looking at houses. I'd look at 15 houses in a day, put in offers for 6 or 7 of them, and get 2 or 3 accepted offers. And the funniest thing is the realtor would tell me the same story every time. The realtor would tell the story, be like, first story would be when I wanted to turn in the offers, you go, you can't offer $75,000. That would insult the seller. And I said, well, that's what I can pay. And he said, well, the asking prices, these will always be between 120 and 125,000. He said, you can't come in that much lower. They're never going to take it. You'll just insult the seller. And I said, well, I have math, and those houses will rent for $1,300 a month. And I know that that's what I can afford. $1,300. I know that based on a $1,300 a month rent, if I want to make a couple $100 a month, I need to pay $75,000 per property. And the reason I was doing that is that I knew if I acted that way, even if the house prices didn't go up again, I would make money every month. And when I looked further into Las Vegas, I thought, this is a place with a really good, strong government who's smart about developing their economy, very business oriented. And I thought, these prices, the rents are not going to go down because there's still people working in the casinos. There's still lots of construction going on in Las Vegas, lots going on there. And I thought, I'm comfortable that the rents will stay where they are. So no matter how long I have to keep these houses, I'll be fine. And so I bought a bunch of houses. And over time, what happened was the houses went right back up where they were. It took a couple of years. So mind you, it did take 3 or 4 years. Houses started going back up and they eventually peaked past that. They're past that today. But when I sold out, they were like 275. And, when you buy a house for 75,000, and by the way, that included my fix-up cost and that cost. I would only have to carpet paint these places. They're super easy. So when, you buy them for 75,000, you rent them and make a couple $100 a month. And then you sell it a couple of years later for, $200,000 more than they bought it for. Very profitable deals. Literally millions and millions of dollars are made with that. By not just by me, but by many people who caught on to this. And one of the things that sort of told me, and one of the things I wanted to give you, is that I think that, first of all, house prices can go down further. Don't ever think that you've called the bottom of the market. You need to wait till you see that market stabilize and then start coming up again. You do not need to catch it at the very bottom. And the markets don't move that quickly. This isn't something that it's like a Bitcoin or something that whipsaws up and down in the flash of an instant. Real estate takes a while to turn around. Things tend to go down slowly. They tend to go up slowly, relatively speaking. They don't happen in days. They happen in months and years is when you get real price shifts. So when you're watching a market go down, do not fall for your breathless friend who may be very well intended. Who says, "Oh, you have to buy. Prices have dropped so much. Last year that house was going for 275." No, you wait until that price falls, and you wait till you hear only bad news about real estate. The popular press like USA Today, Money Magazine, Time Magazine, anything like that, you want to buy when they are absolutely poo-pooing real estate, how it's horrible, nobody should ever buy a house, and it's not even a good idea. You'll see articles that say things like, is the American dream dead? Should you still buy real estate? When that's happening, that's exactly the time you want to look at getting into the market, because those magazines, the popular press, is always about 6 months behind the curve. So when they're telling you, oh, this, you should be out, you should never be in this, that's a really good indicator. You should look at it. And, sorry if anybody works for Money Magazine or USA Today out there, but if you go look in your history, you'll see that you're about 6 months behind what the insiders are doing. So anyway, you want to look when, at cocktail parties, nobody wants to buy real estate. Nobody wants to talk about real estate. And then you'll see the prices stabilize. And you should wait and see, let them stabilize for a while, let them even start to tick up slightly. And then is your time to get in there. And ideally, and I don't know if this is going to happen again, if it is, you need to jump in there with both feet. If it comes to pass that you're able to buy houses in nice sections of town with stable economies, and sections where you're not afraid to go in anytime, day or night, if you get it to where you can buy them from a realtor where they positive cash flow from day one, and I'll give you a rule of thumb in a second for that, you need to go in there and buy everything you can. Rents are not likely to decrease much. People can't buy, they rent. And we do have a housing shortage in America. I've been researching this a lot lately because I'm thinking about, where do I go with my real estate investing side of my business and, property investment. And there is a housing shortage in America. Now, of course, it's not equally distributed. You have extra housing in places people are moving out of, and not enough housing in houses in places people are moving into. The well-known places people are moving into, Florida, Texas, Tennessee, the whole Southeast, North Carolina, South Carolina, those are well-known. That's been happening for decades. That will continue. But there are also some gems out there where you can, if you start doing some research, you'll see housing price, or you'll see employers creating jobs there, employers moving there. You'll see inflow of population, and it's pretty easy to find that data. A couple of Google searches will get it for you. You want to invest in places where the population is increasing and jobs are increasing, because the two biggest drivers of real estate prices are jobs and population. And where population is going up and jobs are coming in, rents increase and housing prices increase. Those are your markets to pick. Those are the ones you want to get into. You want to avoid dying markets. And this is what they refer to in investing as catching falling knives. And the story with catching falling knives is you do not want, of course, to catch falling knives, if it's a good way to get cut, you don't want to buy falling assets. Because if you do, it's just likely to fall further. So you want to wait until it stabilizes. So you do not want to buy housing in declining markets, because a house piece of real estate is a long-term investment and it's not liquid. You can't just, go in the stock market and liquidate it 2 minutes later. It takes time to liquidate real estate. You don't want to be stuck in a deal that may be negative cash flow, maybe have a loan that's maturing and you're up against the wall. You don't want that, because that's when you become a desperate seller. So it is very, very important not to buy real estate while the prices are still falling. It's called catching falling knives in investing. It's a terrible idea. Nobody can just, call the bottom of the market. The only thing that calls the bottom of the market is things actually happening, like prices stabilizing and then starting to come up and continuing that trend. That's when it does. And also tell you that the other things that you'll hear is the common man, the person who's uneducated about real estate, thinks that it's a terrible idea to invest or buy any real estate. And that's a sure sign that it's a great time to get in. Also tell you the long-term prospect for real estate is excellent. The reason I say that is because there is a housing shortage. The housing shortage is not going to be fixed anytime soon. There are problems with issuing permits, meaning in a lot of places, like California is probably a poster child for this, they make it so difficult to get a permit and so expensive. And they also make it so expensive to build with. It can cost you in California $50,000 to get a permit to put an addition on a house, much less get a permit to build a new one. And they make it so expensive and so difficult that they force a situation where there's just not enough housing. And that's not going to change. It's absolutely not going to change. And that's not something that's fixable quickly. So you want to have faith in the long term, but be very cautious in the short term. And I would say, to me, caution right now is don't buy real estate at the moment. And if you're in the house flipping business, I said we talk about house flipping. If you're in the house flipping business, if you haven't done so already, get rid of your inventory. Get rid of it, because in a declining market, the longer you take to get rid of it, the less it's going to be worth. So get rid of it. Finish up your projects, sell them, and do not buy replacement projects. And it is no excuse that, well, I have this business running, I got to keep doing it. If your business is mistimed and you're investing in assets with falling value, house flips take time, 4 or 5 months if you're good at your business. And you need to have time to buy the place, fix it, get it sold. And if during that 5 months, your house falls by 5 or 10% in value, which is more than possible, I would call it likely, you're going to lose all your profit. And if you're like a lot of flippers use short-term financing, or use hard money or private lenders with typical terms of 6 months to a year. And if you're getting a year, you're paying extra for it. You don't want to be in a situation where you can't sell your house, where it's upside down and you've got a loan out with a hard money lender that's accumulating high rate of interest. It makes your life impossible, and you'll end up doing work and then losing the houses. So the good news is there are smarter things to do and better things to do. The bad news, if you were having a successful flipping business, it really is truly time to change gears. And I wish that I could tell you something different, but it's time to change gears. And I want to show you a chart. I didn't today want to do a huge PowerPoint because I think PowerPoints can be boring, but I do want to show you a chart that I think is interesting. So this chart just shows home prices from 2000 to today, essentially. And if we look at this chart, I have to move. There's something on my screen you guys can't see. It's like a thing for the person doing this. Let me move that out of the way. So if we look at this, we can see, a really big, a big increase going up to 2008. And then a pretty big decline to 2012. And look at 2012. It's like this really steep increase in prices. And if you look down there, house prices look like, I don't know, were they like on this chart, maybe they'd be at 140 and now they're over 300. It's 298.68 is right now. So just over 300 at the peak. And this kind of behavior is very common in all kinds of assets. Real estate's not unique in this thing. So what I'm going to show you on the next one is sort of my take on this. This line that I put in here. This line represents a moving average of what's happening with these prices. That's a moving average. And what I found in my experience of life, and I've been in this since 1989 in the real estate business. So my experience of real estate, and most assets follow the same model. When things go up, like look here in 2008, they kind of go down a corresponding amount and it balances it out. So you're still staying on the moving average. And we can see this, you know, if we look, we can see the way things are kind of following it. So what I'd expect to see from here is a drop down to there to compensate and then a slow crawl back up. So what I'm expecting to see is a big drop, like somewhere around here, which would be down a pretty big amount. You're probably talking, 30%. And that's what I think is going to happen. I think you're going to see it fall down to here and then slowly start to make its way up again. Now, why do I think it's going to make its way up again? I think it's going to make its way up again because the underlying fundamentals, underlying being population and jobs, are still there. And underlying fundamentals also being a shortage of real estate. So, but this is not a quick thing. You can see it even here from 2008. This didn't finish its fall until 4 years later in 2012. And then it started to crawl up. It didn't meet the when did it meet the 2012 peak? Around here, around late 2017, it looks like. So it took quite a long time. It took 7 years to get back there. And then of course it, went hyper over here. But what I expect, and this is just a general truth of investing, if you looked over the long term, these moving averages tend to be where it goes, but it has ups and downs around that. So what I would expect you to see is that we're going to have a drop here over time, and then we're going to come back up again. But it's going to take several years. So you do not want to be, buying your flips here when this is what's going to happen. And we don't know the steepness. That I can't exactly tell you. Like you can see even here, the steepness changed. It went here and then flattened out some. So we can't exactly tell. But you don't want to own houses during a declining time unless they can rent for positive cash flow. That's the other side I'll say. If you have places that you can buy that will rent for positive cash flow, it's great, because the ultimate value of the house doesn't really matter if you're making cash flow every month. Just understand that's not going to be a quick turn. It's going to take, time for things to come back. And that's just the way that it is. And I wouldn't, this is just the truth of it. And like I said, I think when you're thinking about what to do in your life, you want to know the truth in things. You don't want to know what you hope to be true. You want to know the truth of it. And the truth of it is what's most likely to happen is things are going to revert to this mean and this slow and steady rise over time. And that's what I think you're going to see. And that tells us that the most likely thing to happen is a big drop here and up here. Also be careful about, people like the realtors, the National Association of Realtors, who absolutely have a purpose and an axe to grind. If you look historically at their projections, they're always super rosy projections. Why? Because they represent the realtors. They want people to go buy houses. They want people to sell houses and for activity. So they have an axe to grind. And it's just, you have to think about that. Anybody you're learning from or listening to, you have to think, what's their stake in this? What is their interest? And just, get your data from a lot of different sources and then sort of compile your own, thought about it. Now, I do think, here's another thing I think. In my experience, as recessions come to an end, like here, if we were looking here in 2010, 2012, opportunities start to show up after this sharp drop. In Las Vegas, opportunities actually started to show up when I first spotted them. They were in here, and they were probably showing up a little earlier than I spotted them. But I first spotted here where the prices were sort of flattening out. We weren't seeing these big decreases anymore. I'm going to take this PowerPoint pen because I think it might be hard to see. So let's laser pointer. Let's see there we go. If we I spotted here and I was seeing prices, just sort of flatten. And my thought on this is, I could buy these places. They were $275. They're still nice neighborhoods, by the way, ones I'd feel safe going into any time, day or night. Other behavior I saw there was that nobody wanted to buy real estate. Like there was no pop culture towards buying real estate, meaning Money Magazine or Time Magazine. None of those were encouraging buying real estate. They were having headlines, like, is the American dream over? Should anybody ever buy real estate again? And as usual, just completely 180 degrees off, because when you're a writer for like Money Magazine, you have to get a new topic every month to write on, and it's hard. They can't be experts in everything. So there's a limit to how good their information is. So anyway, when you spot this, also realize that, you see it flattening out in here, actually in this whole section, there are huge buying opportunities. And when I was out buying in Las Vegas, it was the easiest buys I ever made, because all I had to do was go out with a realtor and look at REO properties. And the offers I were making were on REOs. They were just bank-owned properties. So I didn't care about insulting the seller. You care less. You can't insult a bank. I think it's impossible to insult a bank. Actually impossible. So anyway, there was a lot of desperation on the behalf of the sellers that had to sell. People that had REOs, meaning banks, needed to sell those assets. They couldn't hang on to them. The Federal Reserve was like, you guys got to get rid of this stuff, get rid of it at whatever price you need to get rid of it. And they did. And there was plenty of buying opportunity. If you look at it, there was buying opportunity on for several years up here. And for me, the buying opportunity ended when the house prices hit 120. I stopped, because I was like, nope. My rule is that I want a second plan here. I want a plan that even if, the house prices don't go up anymore, I can sit here biding my time, waiting for the prices to go up in a market that I believe in, and making money every month. That was my own personal, conservative approach. And I think that's a good approach. And again, I don't know if that opportunity is going to come up again. I would encourage you to keep an eye on it and see. And you've got a while before that's going to happen, because house prices need to drop significantly. I also think that rental market is going to be a good place to be. And we'll talk about apartment buildings in a little bit, but the rental market, like apartment buildings, is going to be a great place to be, because there is a housing shortage. There are also people whose credit is going to go to pot during this recession. People that lose jobs or have to take a lower paying job. You're going to have people who have to juggle bills and they're paying bills late, and their credit's going to take a big hit. And mortgage companies, especially during tough times, don't lend to people with damaged credit. So those people are going to be in the rental pool. They're going to be in for a while. Also, there's not going to be as much excitement about buying places. So people are going to want to rent. They're going to sit there and say, you know what, let me just rent for a while. Let's see what happens. And so you'll have a bigger pool of renters there. And I would say when you're looking at rental places, for me, there are a couple of things that I look at. First of all, I only want to invest in places where I feel comfortable going anytime, day or night. The neighborhoods with really, dangerous conditions, shootings and muggings and things like that, it's very difficult to attract good tenants. You end up with a pool of very stable tenants. Those are the kind of properties that pencil out very nicely on paper, but they don't actually work in the real world. You get tenants that have a lot of just social problems, a lot of shortfalls of money. Sometimes they're angry and upset about that, and they damage your unit as a result. They lose their jobs and they won't move out. So you end up with a lot of extra costs of refurnishing apartments, refitting them, and holes get punched in walls and damage happens to walls. And you get people that don't pay you, and then you've got to, evict them. And often that costs many months of rent by the time you're done with, when you finally got around to filing an eviction, then the court finally got around to hearing your case and finally got around to an eviction. And then half the time they damage your place on the way out because they're mad at you. So I don't think there's money to be made in the really low end housing. Maybe somebody different than me has a different opinion. I don't know. It's not, I've managed low income housing and I would never do it again. My first job as an entrepreneur, I should say, I'm my first job out of college. My first job when I shifted to entrepreneurship, I had a part-time job managing a 60-unit apartment building that was low-income housing, mostly Section 8, and it was dreadful. I mean, I've never seen more damage to an apartment, more crazy stuff going on. Like at one point, we needed to control the heating bills, so we put a thermostat in a closet up on the 3rd floor, and somehow the tenants found out about it. And what they did to make the building warmer is they threw a desk through the window in that hallway so that the cold air would come down the hallway and make the closet cold, and then the heat would go on and be on all the time. It's just crazy stuff. And where do they throw desks and chairs through your windows to get more heat? Well, the answer is in really low-income housing, they do crazy things like that. And I don't think that's ever a place to invest. I think that's just foolish investing. I think those are things that don't work out over the long term. You should stay away from them. So I think you should always invest in places where you feel safe going day or night. I also think you should look for places where there's an inflow of population, there's an inflow of jobs. Now you can do that on a micro level. You can do it locally to your market. You look at the places in town where people are moving into and going to, because there are always micro markets inside markets. And if you're an insider, like you want to invest in your own hometown, which is a great idea if it's a good place to invest, then look for those micro markets where people are moving into and stay away from the markets where people are moving out of, because there are always sections of town that are getting bad reputations and people are moving out of. I do think for rentals, it's a great idea to invest in markets out of your area, as long as you're willing to make trips down there and establish relationships and you're willing to do that management. But you're going to do far better in a market where it is rising, and it'll be rising because employment is coming there and population is coming there. That will organically and naturally increase the value of your property, and it makes your job much, much easier. Stagnant markets, it's okay. Like I invested for years in Philadelphia. I think for the most part, that wasn't the greatest investment plan. I own lots of rental places in Philadelphia. I still do. It's a flat market. It's not one where prices go up. So you never get that external growth. Do you get the year over year growth? Yeah, you get a couple of percentage a year, and over a very long time period, you can make a lot of money. But that same work applied to, like, let's say I was investing in Raleigh-Durham, North Carolina from 1989 to today, instead of Philadelphia from 1989 for today until today. If I put the same time and effort into Raleigh-Durham, I'd be exponentially wealthier. And I think, you're fighting the tides when you're in a stagnant place. And I think maybe a better way to say that, I think when you're working in a place that where the prices are increasing organically, that is swimming with the tide or with the stream. And, when you're swimming with the current in the stream, it's much easier. You get much further, much faster, even with the same amount of work. And I think that it's a good, it's interesting to check a text message, because I know my team isn't here with me, so they have to text me if there are any issues with anything. So I don't think there are, but just double checking. So anyway, you're going to do much better going with the flow and with the current. And where that is in markets where it's organically and naturally coming up. It is a nuisance to invest remotely, no question about it, but it's worthwhile. That would be my opinion. I think it's absolutely worthwhile. So that would be something that I think you should consider. On the topic of apartment buildings, I absolutely love apartment buildings, but there are a few caveats to it. I'm not a huge fan of like duplexes and triplexes. I think that's a great place if you're just starting to do a couple of deals and just get started with it. I think that's fine. I'm not a huge fan of building a huge portfolio of them. I think you're better off, as soon as you can get to it, getting onto bigger apartment buildings. And you want to build some credibility with the smaller places, get your experience based there, own half a dozen duplexes and single family houses and start to prove that up, and then start to expand to bigger apartments. The reason I like bigger apartment buildings is if you're going to be investing remotely, it's feasible to have outside management with a bigger building. It's hard to have outside management with a duplex or a triplex because the management is just too expensive. And people aren't that interested in managing a duplex or triplex. It's really like, it's not like you can get a really competent commercial business to do that. That's something where you have to find, one of your tenants to manage it, give them a little discount on the rent, and that's what you do. But I would say if you're intent on apartment buildings, which I think are a great investment class, I think that the way to do that is look in a strong market and start to get the players there and get an education on that. There are people that give good educations on apartment buildings, and I would work on getting yourself that education. I think it's just smart. It's something that is doable over time. Most importantly, because I don't want to go down a huge rabbit hole with that right now, but I do want to tell you, I do think that rental apartments are good as long as you're buying them on a positive cash flow basis as things stand today. You need to be getting a return on that building. And in my view, for a good middle-class building, should be getting a 4 to 5% return as is, hopefully with some room for you to improve the building, meaning make it more appealing That's things like improving the landscaping, making the signage better, cleaning the hallways, changing the carpet in the common areas, doing better lighting. And as people vacate units, fixing them up, making them nicer so that you can attract a better tenant. That's called repositioning. That's where you basically think of it. I don't get too technical because I know that some people have more background than others. Basically, repositioning means making it nicer and appealing to a tenant that can and will pay you more. That tends to pay big dividends because the tenants that can and will pay more also tend to be easier on buildings and also tend not to default on rent. So I would say that's it's a lot of hidden benefits that you don't really appreciate till you own it. You want to look for a building where you can do some of those improvements, attract a better tenant. You also look for buildings, quite honestly, where the landlord has not increased rents with market. There are lots of people like that. They typically have owned a building for a long time and they're making money and they kind of leave well enough alone. If they're making money and they're happy, they don't do rent increases, regularly. And so what happens is after a while, the rents get way out of whack. You can have things that are, 15, 20, even 30% under market as far as rents go. And you can come in there as a new landlord. And as you turn over units, you bump the rent, 20 or 30%. You can make a huge difference in the value of that building, a huge difference in your cash flow. But again, I don't want to get too far into that other than to say to you, I think that rental apartments are still a good idea. I think that you only buy when it's going to be positive cash flow from day one and where you can fix it up and make it even better. I think that those are solid. I think they're going to continue generating income and look for markets where there's population still coming in and jobs coming in. Stay out of the markets where there are jobs leaving and people leaving because the prices will go down. If you think about a city like Detroit was a good example. Detroit had riots in late 1960s, and that real estate didn't even start to recover till 2012, 2015. And if you're talking from 1970 for round purposes to 2015, that's 45 years. You don't have 45 years, neither do I. So don't go in those falling markets. It's a bad investment strategy, is what I would say. The other thing is going to be interesting, and I'm curious to see how this is going to turn out. And I don't have an answer for you in this, but I think it's something worth looking at. There should be, I don't see any reason there wouldn't be, a huge collapse in commercial real estate, especially office building. I think that the remote work is here to stay. I think the time when people commuted every day into office space and there was huge demand for office space, I think that's over, at least for the near term and probably forever. And, because even though we have this crazy recession, there's still a shortage of workers. You can tell that, go to any store and you'll see it's understaffed. Every place is understaffed and they have, help wanted signs up all over the place. So, we have this kind of weird situation where we have a shortage of workers, but we still have a recession and more unemployment. It's kind of crazy. But back to the office buildings, I don't see those office buildings renting out. I'm hearing stories from well-educated, smart, economist friends of mine who you would know if I shared names with you, you would know them. And you might know, like Peter Schiff kind of guy, John Malden, people who have huge followings. They're personal friends of mine that I talk to casually at social dinners and on lunches. They're telling me, and one of my famous economist friends said, he was in Silicon Valley. He said, I drove through and there is office building after office building with no cars in the parking lot. It's like these brand new, beautiful buildings and there are no cars there. And he said, it's not really being reported yet, but he said the vacancy must be near 100%. And, that's in Silicon Valley, which is the heartbeat of tech and print money like crazy over there. And it's just a sign of the times. And those buildings are going to have something done with them. And I think, creative person might look at those buildings, say, could I convert them to apartment buildings? Can I convert them to Airbnb units? Can I convert them to something else that would be useful? Because I don't think they're going to be needed as office buildings. And there's been a lot of work over the past 20 years even. And this I watched in Philadelphia with great interest. There's a lot of conversion of office buildings into residential. It's doable, especially with newer buildings, because those newer buildings have, designed to have open space So they'll have an elevator shaft with the build out there. And then everything else you can really move around. So you can build it out as you want. So it's pretty easy to convert those into living units. And I think that's an interesting play. And where the play I think is going to be is banks are going to be forced to foreclose on those assets. Because one of the things about commercial loans that is different from residential loans, you don't get a 30-year fixed rate commercial loan. That doesn't exist. What you do get is a loan that's variable rate that'll typically reset every couple of years. 5 years is a typical number. So after 5 years, rates reset to whatever the current level is. And you have people whose loans are going to be resetting this year or next year and the year after, where their loan may have been 3, 4, 5%, and that loan's going to reset at 6, 7, 8, 9, 10%. And they're already having high vacancy. They're not going to be able to keep their buildings. And it's going to be really a problem for people owning real estate that they can't rent out. So what usually happens there is two things. One, you get an opportunity to buy them at foreclosure auctions. So I'll talk about that in a little bit. But you also get an opportunity, if you're creative, to buy defaulted notes from banks and take over, step into the bank's shoes and take over from there, and then do the foreclosure yourself or do a workout. Those can be really profitable deals because the banks, for their own reasons, often need to liquidate those properties. They get a lot of pressure from regulators when you have what they called an impaired loan, or a loan where the borrower is not making money with the property and the borrower is probably having their own financial troubles. The regulators make the banks set aside cash in the event of a default. And statistically speaking, banks expect to lose about 40% of their loan amount when they foreclose. That's just a general number. But generally they expect to lose about 40%. So a loan that they've lent, commercial loan they've lent, $4 million out on, they're expecting to lose about 40% of that. So about 1.6 million or so. So they're expecting to take a big loss. And so instead of doing that and letting it drag on for a long time and forcing them to put up capital, it's better for banks to sell off that loan and to just get rid of the whole problem and then just go make new loans and make new money. Banks are good at cutting their losses. They're pretty savvy and smart that way. And the regulators really push them to do that. So I think one way to play that game is to, build relationships with local bankers, meaning local institutions that lend money to local real estate investors, and talk to them about, if they have defaulted loans they'd be interested in unloading. You can often get those at great prices, and those are good things. You can also sometimes buy them at foreclosure auctions. Those can be good ways to buy. Either one is good. If I were given a preference, I'd rather negotiate a private deal with the bank. If that's not quite within your wheelhouse yet, then plan on going to foreclosure auctions. So let's talk about foreclosure auctions. So with foreclosure auction, and by the way, last thing, on the office buildings, you need to have a plan going in to convert it to something useful. Things that are useful are things like senior housing, Airbnb type housing, residential apartment housing. Those things are all good asset classes and all things that you could think about. Storage is still good. Self-storage is great, and it's going to continue to be great. The reason I say that, even now after it's been on a run for a long time, when people have to move out of houses to apartments and downsize, they buy storage. So, and when they don't have a lot of storage, they buy storage. So when they're, just if they're operating in a smaller place than they'd otherwise be, they have storage to put their winter clothes in. Heck, when I lived in New York, I had a storage unit just because we'd swap out the Christmas things and we'd swap out the winter gear, the ski gear and all that stuff, just so it didn't clutter our apartment, because, living in Manhattan, space was an absolute premium. So we'd have a changeover. When went from winter to spring, we'd bring the winter stuff down to storage and we'd get the summer stuff out. And then when summer ended, we'd change it the other way. So when people are forced to live in smaller housing, they use storage units. So I still think that's a great asset class. Lots of people teach about that. There's some really good people you can learn from if you're interested in that asset class. I think that's going to remain good. But whatever you invest in, again, whether it's self-storage or housing right now, you need to have things that will cash flow from the beginning. Not cash flow on hope, not cash flow on prayers, but actually cash flow. because that's the way you're gonna be safe and navigate through this recession. Speaking of foreclosure auctions, so we'll talk about two categories. One are tax sale auctions. They're called tax deed auctions, and the other is mortgage foreclosure auctions. So one thing about those, they are going through the roof. If you look in the popular press, Yahoo News had an article the other day, not the other day, an article late October, where they said foreclosures are up 167% from this time last year. Forbes followed up shortly after that. They had an article with, mortgage foreclosures that doubled. The foreclosures are doing this and going to continue to do that, because as the economy slips into recession, that's what happens. What happens? Let me go back here. So slide is bothering me. I don't feel like looking anymore. When economic times are bad, more people lose their house to foreclosure, both tax foreclosure and mortgage foreclosure. So the foreclosure numbers are through the roof. They've already doubled. I expect them to triple. I really, this sky's kind of the limit on it. It's really sad. I wish nobody ever got foreclosed on. But like I said, I look to know the truth of things, not to what I wish or what I hope. I just think we're just going to see just increased numbers of foreclosures, and that's it. And so going to the auctions can be good, but if you're buying there, you just have to buy at big bargain prices. You cannot be buying at retail prices. For quite a while in the foreclosure market, especially lately, people have been paying crazy prices. Just they're paying prices that were near retail. And that's what happens when there's a lot of hype and hysteria. But as the market cools down and people get less interested, there should be bargains at their foreclosure auctions, in the future. Again, that is not something to go run out and do tomorrow, because we're still in a time when the underlying assets are decreasing in value. So you don't want to buy on today's price and hope to resell, based on that, because tomorrow's price is going to be less, and that can gobble up your profit margin and make you upside down faster than you want. So now's not the time to buy. But in the future, I think there will be good opportunity there. And again, that's when, if we go back, I'll go back here. We go back to our chart. Let me use this one. You don't want to be buying at a foreclosure auction here. You want to be buying at foreclosure auctions like here, when things are stabilizing, and even here where they're coming up. Here's where your sweet spot is. You see them coming up. And here, if you look at the time, we're talking about 2 years of uprun. It doesn't need to be 2 years. 6 months is enough. 6 months is enough to see it coming up. And then you want to go there. But it takes a while to get to that place. This is not something that happens tomorrow. So keep an eye on it, but not yet, I would say. Not yet. But there is a way to play these foreclosures. The way to play the foreclosures is the overages game. Now, I know you guys know I'm well known for overages, and I want to explain a little bit. I won't belabor it, but I think it really is something you need to know about right now. So overages are just monies left over after a property is sold at a tax or mortgage foreclosure sale. And when the property sells for more than the amount that is owed, then the extra money that's left over after the debt is paid can be claimed by the former homeowner. And if you think about it, it makes sense. Let's just use a hypothetical. Say that you're talking about average house in America, which is, we'll look at this case chiller, $300,000 today. When that house sells at a foreclosure sale, it's going to sell for about, in a market like we're going into, about 70% of its after repaired value, meaning about 70% of 300,000 minus the fix-up cost. So if you said, we'll take a hypothetical house, let's say that it's worth 300,000, it sells for 210,000, which is 70%, which I think you agree with me, would be a great deal. Buy the house for 210, it's fantastic. And minus the fix-up cost. So let's say that someone thought, that house has been neglected for a while. I'll bet it takes 50,000 to fix that up. You say, great. So what are you going to pay? Well, if you're paying 70% of retail, that's 310,000. Minus your fix-up cost of 50, that means you'd pay 160,000 at that auction, which is a great price. Look at it from the perspective of the person losing the house and the overage. So if you're talking about a tax sale, they probably owe 3 to maybe 4 years worth of taxes before the property gets sold at tax sale. Taxing authorities don't let it get further than that. So let's take worst case scenario, you owe 4 years worth of taxes. On a $300,000 house, your taxes are going to be about $6,000 a year. And if you're 4 years behind, you're going to be $24,000 behind in taxes. Let's double it. to account for penalties and interest. So let's say you owed 50,000 in past due taxes, penalties and interest. And you'd even include in there the cost of the sale. That would be enough to cover that. So you owe 50,000, but yet your house sells for 160,000. And so what happens in that case is that the extra money, meaning the difference between the $160,000 that the house sold for and the county collected at the sale versus the 50,000 that was needed to cover the debt. Well, that money, which is $110,000, is called overages. And that money is sitting there waiting and ready for you to claim. And by you, I mean the former owner of the property. And this is a huge windfall for them. They almost never know about that money because they don't think about, oh, my house got sold. I wonder how much it sold for. Could I get some extra money out of it? They think the government took their house and sold it. And that's the end of it because the government sold it. So therefore the government must keep the money, right? That makes total sense. The real truth of it is that the government gets to keep the amount that it's owed, $50,000. They do not get to keep anything extra. The extra money goes to and belongs to the former owner, but there's a catch to it. That former owner has to ask for the money and they have to apply for it. And if they don't even know about the money, they're certainly never going to ask for it and never apply for it. And that's the situation that the vast majority of homeowners who get foreclosed for taxes or mortgage, either one, they have no idea that there are huge sums of extra money sitting around waiting for them. And I can tell you from our own personal research, and we have a big business doing this, there are hundreds of millions of dollars sitting out there right this minute in our own database, just our own database. We have a couple thousand leads that are worth over $260 million in excess funds. And we haven't even scratched the surface. Like we don't even bother collecting more leads than that because there's no point to it. We can't even get to all the ones that we have. So the overages business is very interesting for a couple of reasons. One, when you look at what you do behind that business, you get a list, which is in the public records, which tells you the money that's available. So number one, you get the list. Let me just show you, because I think I can just open up a browser here and do this. Let me just see if that works. Yeah, let's see, I think it will. Yeah, there we go. This is a list.
Hey, Bob, it's still showing your slides.
It shows the slide. So how do we share this other page? Let me see how
Down the bottom, share screen, you might be able to change it to a different screen.
Okay, let me see.
Or select whole computer.
Let me see on that. Sorry. So do you see it now by any chance?
Nope, not yet.
Okay. So I'll do new share. I think I know how to make this work. Let's see. There we go. That do it? Let's see. How about that?
Yep, I can see Google now.
Okay. So this is really going to be easy. So we're going to go to the Google. We're going to be a Googler. And I'm going to show you an excess funds list just so that you'll see what I'm talking about. So let's do DeKalb County excess funds list. This is DeKalb County, Georgia. My typing is terrible. I should have taken typing instead of law. I'd be better off. And maybe not, but
I only type with 4 fingers.
There we go. So you can see this is pretty simple. This one, a very clever thing, says excess funds, DeKalb Tax Commissioner. You always want to look that it's like a dot. Usually it's a .gov site. You don't want the commercial sites. That's just silly. You could do this from like DeKalbCounty.gov. That would be fine. But this one I happen to know is the right one. So we get to the website for the tax commissioner, and there we can see this excess funds list. This one's dated 3/7/2022. That is the current list. That essentially means that's the last time they held a tax sale, and they update the list. Like as claims come in and go out, they update the list. So it is the current list, whatever you see. So this is the list. And let's see, if we start looking at this, we can see, I'm just going to move my camera because it's interfering with my, I'll give you my handsome profile. It's interfering with my looking at this. So these are examples of properties that were sold at tax sale and money that's left over. So here's a company, Dueling Enterprises. This one is almost inevitably somebody trying to do a real estate deal that didn't work out. They're owed $65,000. It's been sitting there for, what's that, 2.5 years? No, it's 23. Oh my gosh, it's been sitting there for 3.5 years. So a long time. So I can tell you a couple of things about that. One, nobody from Dueling Enterprises knows about this. And secondly, they'd be really happy to get part of that money back. And they'd be happy to pay you a finder's fee to bring it to them. Poor Gwendolyn Andrews, look at this poor woman. She lost her house, it's about 1.5 years ago, $124,000 sitting there. Don't you think that poor Gwendolyn could use this money? She lost her house at tax sale.
Yeah, she could.
She really could use it. Covert investment properties, same thing. Someone trying to do something in real estate, lost the property to the tax man, $115,000. Here's poor Teresa, $130,000 that she's owed. She's been owed it for 2 years, approximately, a little over 2 years. And this is just the first page. And we go down to the second page, just look at some random spots here, some biggies. Dorothy owed $144,000 for the past, year and a half. Donald Brennan, poor Donald, $132,000. And he's been owed this money for 1 year and 4 months or 5 months. Drew Illas, look at poor Drew. Drew's owed $183,000. We just go on and on. Herbert, $69,000. Look at these two. Between the two of them, almost $200,000 between Charles and Albert. Just go on and on and on. This is like a 5-page list with big claims everywhere. It just doesn't stop. And, they're old claims, even, look at Raimundo. Poor Raimundo has 2 claims, 24,000 and 26,000. So if my math is correct, that's 50,000 between the two of them. Raimundo needs his money. He needs to get some money back, get himself started in life again. And he's been sitting there again for 1.5 years. And the other thing that's going to happen. So the reason this is as of March 7th, that's the last time they held a tax sale. When they hold their next tax sale, it is going to be a whopper of a tax sale. And this list is going to blow up. Can you imagine what's accumulated since March of last year?
Oh, wow. Yeah.
I mean, think about that backup. Crazy.
A lot of opportunity to help people right there. And it's going to be even more coming into this year.
Check out this guy. Nicholas Proterra, $331,000.
Wow.
From May of 2021. And, so sometimes people ask me the question, they'll be like, hey, why don't they get the money themselves? Here's the answer. They don't know about it. If Nicholas or any of these people we've just talked about knew about their money, they would be down there yesterday morning getting the money. Seriously.
Yep.
They'd be down there as quick as possible. So we can know for a fact that Nicholas doesn't know about it, because think about it. And DC, and for everybody out there, DC is the guy who's with us talking. If you were owed $331,000, how quick would you get down there? Would you wait 1.5 years?
No, I'd be there today.
You'd be like hanging up the phone, right? You'd be like, anybody would. And
yeah, exactly.
It's just, and the list just doesn't stop. Look at Deborah Ann Overby, this poor woman. $175,000.
Those are big, yeah.
These are, and look at Subish. I guess $300,000 for Subish. This poor guy. And if we just did these 3, I get Subish and AFL and Dresden Trust, Carla, this like $1 million just in this little part of the list. There's $1 million.
Yeah, they could buy a new house with cash with that.
Yes. And so, when you look at and this is one tax sale list. This is not like every tax. This is one that we're talking about. And there are 3,000 counties in America. So there are plenty more where these came from. And, every county holds tax sales. So, these are the lists that are out there. So my point of this, and by the way, also look at this. So poor Subish, his is 1.5 years too. There are a lot of people like that are just been owed a lot of money for a long time. That's all. Just crazy. And all of these are people that we can help. And one of the best things about the business, DC had said in the beginning, in this intro, that I like to help people. I find it so amazingly rewarding and makes me happy, makes me feel significant, makes me feel there's a reason for him to be on this planet for helping 2 people. One is these people that have lost so much, getting their money back, and helping people like yourself that say, you know what, I'll take a shot at this. I'll do this business and I'll help these people. And typically we're getting, when we do the work, 40% of what's owed. Sometimes it's 30%. Like if I was talking to Subish or Subash for $304,000, I would absolutely do that for 30% all day. For $90,000, absolutely
Mhm. Yeah.
8 or 10 hours worth of work. And I think Subash should be tickled pink when he's getting, working with me, $210,000 cash he never knew existed.
Right.
And it's such a win-win, such a win-win. The only one that doesn't win is the government, that if nobody gets this money in time, the government seizes it. So, that's, you have 5 years in Georgia. It's different amounts of time in different states, but you have 5 years in Georgia. And I'll mount this camera again. I'm tired of holding it. So let me bounce it on.
I remember the one that you were most excited about helping was the homeless woman, where you flew to hand her a check in person. You were really excited to help her.
Yeah, Carrie Johnson. She was a woman that was living in Connecticut. She was literally homeless, and she didn't have a bank account. She had lost all of her ID when she ended up becoming homeless. Everything got taken and stolen. And so she didn't have a bank account. That had gotten closed when she couldn't even receive her statements, and the account ran out of money. So she had nothing. I actually had to go up there and help her, cash the check, open up a new bank account, and we changed her life. I mean, to put it mildly, we went up, actually met her in the homeless shelter, brought her out of the homeless shelter, and we, by the end of that day, she had a bank account, $32,000 cash in the bank account. She had a debit card that she could use to check into a hotel. And if we fast forward, she was able to then leverage that with our help into, now she has her Social Security. That's flowing because she needed ID to get that happening. We helped her get that. She has disability because she's disabled from a work injury. And she also has a pension. She actually worked for the state of Connecticut for over 20 years. So she has a pension, and all of that was being held up by her homelessness situation and lack of ID, and just generally having a hard time tackling this stuff. It's another thing that you need to know about the people we're going to be helping. They just are, in a lot of ways, defeated and helpless. They lost their house to the tax man. For Carrie, that house had been in her family for 100 years. She felt terrible about it.
Oh, wow.
And, she was just not, she needed someone to come pick her up off the ground, say, we will do this together. We will help you. Now we are a business, so we do charge money. Sometimes we do things for reduced rates or for free. But generally speaking, we need to be in business month after month. I've got a staff to pay, so we charge money, just like a doctor that helps people get better, or a hospital. You still charge money. Even if you're a nonprofit hospital, you charge money. So, it is a win-win, and we've changed people's lives dramatically. And I think, you can too. And that brings me to sort of talking about what to do today. Here's my opinion on what you should be doing today. I think the overages business is absolutely ideal. The reason I think that is that it's a business that you get into. It's not terribly expensive to get into. Our course is about $1,500, so it's not, not expensive. And it's comprehensive, teaches you everything you need to know. So you have that. It has all the resources in it, and it doesn't take a long time to start. If you study 8 to 10 hours of time with it, you can get started getting your list. I mean, you can see how easy it is to get a list. Not hard at all to get a list. So you can start getting your lists. We teach you how to find the people. We also teach you how to deal with things like, oh, it's a condominium. How would I approach them? How do I find the right person? Or it's an LLC. How would I, find them? And how would I approach the right person? We teach you all of that, even down to trusts and estates and things like that. We teach you all those ins and outs. And most importantly, we teach you how to approach the people, because the challenge in this business is not leads. Like, we've got leads coming out our ears. And you can see that just from this list, many millions of dollars just on one list. It's not the leads. What the challenge is in the business is getting people to believe you and understand, hey, there's really an opportunity. This person that's calling me can help me out. You can really help them out, but you got to get past the skepticism. So that's a lot of our training, is teaching you the words to say. We give you an exact script to do it with, because you have to get past that skepticism. And I would say that one tip I can give you for now is be patient and kind with people. They've been through quite a lot. Losing your house is really traumatic. I think, in my view, the traumatic things in life, death, divorce, illness. And I honestly think, losing your house is probably right under that. It's not as bad as a death not as bad as a family breaking up, not as bad as a serious illness, but it's really heartbreaking for people. And you got to be nice to them. And the nicer you are to them, the more successful that you'll be. So be kind to them and just understand they're going through a tough time. So just be nice to them. That's all. Be patient with them. You're going to be talking to them a couple times, building some rapport. If you hear things like you hear a dog barking in the background, you say, hey, do you have a dog? Talking about the dog is a great topic. Dog lovers love talking about their dogs. And it's those kinds of things that establish rapport. And there are things that we have in common in life that we can find. If you hear kids in the background, so do you have kids? Chances are you have kids or grandkids, and you can find commonalities to talk about. When you approach it that way, it's really easy to build people's trusts and have them say, you know what, I'll try this. Because when we work, and when you work for people in this business, we don't charge any money up front. We don't need a deposit. I don't need a credit card. I don't need your bank account info. I don't need your social security number. I don't need any of that. All that I need is your permission to go and pursue this money. And if I was talking with, let's say even a smaller, let's say I'm talking to Colin. So Colin Colborn, because this may be for you guys, maybe it's more approachable. It's not a ton of money. So I'm talking to this poor guy that's been owed his money since 2017. That's 18, 19, 20, 21, 22. Oh my gosh, his money is going to disappear soon. By September of this year, it'll be gone. So, if I were talking to Colin, say, Colin, I found a pretty big refund that you're owed. I think working with us, I should be able to get you around, $13,000, $14,000, depending on the costs associated with the case. And that's, I probably can do a little better than that. I'd probably tell them 15, I'd probably tell them 15 safe. I'd say, I think I'd get you around $15,000 plus or minus, depending on the costs. And all that you need to do is, meet with the notary for 15 minutes, give me permission, let her or him check your ID because I need to make sure I'm working for the right person. And you'll give me written permission to go pursue this. And I will go pursue this. I will pursue it like a dog after a piece of steak. I will be on it. And we'll go try and get that money for you. We expect to be successful. If we are, we'll get paid a percentage of what we get. If we're not successful, it won't cost you a penny, and we'll put up all the costs. So you really have nothing to risk. And let's do this. Let's give it a try. That's basically your conversation. And our call script goes into it a little more in depth, but that basically is your conversation that you're having. And you just want to be patient because Colin lost his house. It's traumatic. And, it was a couple of years ago, so he won't be in complete trauma stage at this point, but he'll be interested in getting money. If you tell him, hey, I think, $15,000 could be yours working with me, he'll be tickled pink. And, eventually he's going to find out it's 25,000. What I usually say to people when if they ask me the question, well, why do you say 15 instead of 25? I'd say, well, 15 represents the bottom line to what you're going to be getting. That's why I talk about it that way. Because I think of it, what's the bottom line for you? And that's what I want to give you. So that's why I give you the bottom line. People are like, okay. Now, some people that do our course or our business will tell them 25,000, then explain the fee later. That's okay too. There's room in this business for your own style. But mostly what there's room for is people with heart. You got to have heart. And, we're going to a really tough time in the economy, and the people that lose their houses at tax sales and mortgage foreclosure sales, they need someone with the heart to reach out and help them get their money. And they're not equipped to do this themselves. They don't know anything about where the money is. You're not going to tell them where the money is. You're going to tell them I found a refund, and if you'd like, I can help you get it. And my reward is a percentage of what we get. So you're not telling they're never going to be able to find it of their own. There are dozens of sources of lost money and unclaimed money, dozens, literally. And this money is also not found on the state treasurer's websites and places where people would search. This is on a list that literally you have to go into the list and individually look for your name, which would never happen. I mean, this list, it's about 30 entries per page, and we have 5 pages. So that must be 150 entries. No one's going to look through that. It's not even in alphabetical order. So it's not any chance. So these people don't stand a chance unless you or I go out and reach out to them. The other thing I like about this business that's really unique is I know exactly how much that claim is worth to me before I even call the person. Like, I know that Colin's claim is worth about half of what Gregory's claim is worth. So I might work like twice as hard to get in touch with Gregory, because Gregory's owed 59,000 and Collins owed 25,000. So literally, Greg, I guess is owed more than twice as much. I know that maybe I don't want to call on this one at all. You know, Gal Harper and LLC, $7,400. Maybe I don't want to call at all on that one, but I do want to make sure I get around to talking to Subhash. He's owed $300,000. That's worth 100,000 in my pocket at least. So, you know, I do want to talk to him. So it's really interesting business. The other thing is the leads are free. You know, these are, you don't pay for them. You just do simple internet searches that we give you, and the list is delivered to you at the speed of, you know, electricity, just moments. And there it is. It's free. And all you have to do is follow the system, call these people and sign them up. I really like it. And the way that I think all this fits together to me, do the overages business now. It's a business that you can do from home. It's a business that you can do in your part-time and your spare time, and accumulate your cash. Because as we go down the, and I'm gonna be fancy. I'm gonna see if I can switch my video. I don't know if I can pull it off. I'm certainly gonna try. New share. I did it. I think I did it. Hey, DC, did I manage to switch to the PowerPoint?
Yeah, can see it.
I feel such a sense of accomplishment. So
Yes.
as we head down the housing value curve like this, which is just going to be from up here like that, as we head down that, if you're the man or woman who's accumulated cash, you're going to have amazing buying opportunities. Because the man or woman with cash, when everybody is panicked and everybody's out of cash, you are king or queen of the financial world. You can absolutely buy things that you never could have bought at the world's best prices. Everything goes on sale, everything. And that's how you get rich. You get rich during, you get rich buying here and holding and holding and maybe selling here. You don't have to sell there. You could sell, like I sold here. It was great. I went from here to here on my curve, and it was great. So Las Vegas was fantastic to me. Did I cry that I didn't capture this? I'm a big boy. I didn't cry. It's like, oh, I wish it would have been nice if I'd held a little longer, but did I really object to like a 40% increase or 50% increase? No, it was fantastic. You get a win and you go on to your next game. And the next game is starting. And the game right now that you want to play is accumulate cash is your game. And the way to do that is in a business that accumulates cash. I'm going to go back to our list for a moment because I find it more entertaining and interesting than looking at this chart, which I've looked at far too much because I was studying it. Go out and help these people. That's what you need to do. And let me just see. Let me do another one. I'll show you another one just for fun. And just look and see what's here. So if we look at Broward County, which is Florida, Fort Lauderdale, this is a 35-page list. 35. That's right. I said it correctly. Let me move the camera. That's a 35-page list. And if we look at this list, I mean, look at the money that's on here. I'm just moving the camera because it's interfering with what I see on my screen. So if we look at the surplus here, $78,000 in this one, $270,000 on that one, 140 here, 115, 175, 322. And this is 35 pages of this. And check this out, DC.
Yeah. The one up top was they owed 28 and it sold for 300,000.
Hey, if you owe 28,000 in taxes and you don't have it, it may as well be $1 million.
Right. Right.
And, you look at these and look at the numbers.
Yeah, there's plenty of opportunity to help people. It's crazy.
We're on page 4 or page 4, 5. I mean, there's page 5 of 35. So we're like 10.
This is going to multiply this year, huh?
Yes. As unemployment goes up, and the people that are going to lose their houses first are the ones that are already struggling, and there are many of them who are struggling, and they're playing catch up. Even in a good economy, there are always people playing catch up, and they're just not going to be able to catch up this year. So we're going to see more sales. House prices are still healthy, so bidders are still going to be paying a lot at the sale.
Right.
And you can actually see it in here. Do you see this relationship? Like, this is the amount of taxes that were owed, the opening bid, and there's what it sold for. Obviously, this piece of land. this is, they owed 7,800 in taxes, sold for 60,000. This one owed 13,000, sold for 38. This one owed a lot, 164,000, sold for 377.
Yeah.
So,
Mhm.
that's where these monies, this guy owed down here 43,000 and, sold for 300. The resale price has everything to do with the value of the property, nothing to do with the taxes that are due, because there are enough bidders there that nobody gets it for taxes. They get it through competitive bidding. So, again, this is 35 pages of opportunity. 35 pages. There's 212,000 here, 119,000. I'm just picking off the six figure. Oh, there's a 190. There's at least 500,000 just on this page, because 200 plus 200 plus 100 plus.
Oh, yeah. Yeah.
And it literally is just page after page. That's another interesting thing, DC, that this business has really changed, where if we looked at this a couple of years ago before the run up in real estate prices, we didn't see these six-figure overages like we do today.
Mm-hmm.
And
Yeah, it's because of that spike from the last 2 years, right?
yes. And this is life-changing money. Like, imagine if you're out there and you work this deal, $373,000 overage, and you make, $100,000 on that. That's one transaction. It's going to take you 8 to 10 hours to do it, $1,500 to learn it. And all you have to do is call the person and invite them to work with you to get this money they don't know about.
It's pretty amazing. And you don't have to buy a house. You don't have to fix it up. You don't have to raise money. You don't have to invest any of your own capital into the property. It really doesn't get better than this.
You just do the work. And that also turns my attention to something. So for you out there, I think that the kind of business to get into right now is a business like this. That's a service business where you're not, buying inventory. You're not opening up a store. You're not buying a franchise. Instead, what your investment is really your work and effort. So you make an effort to learn, for example, overages. So make an effort to learn that. You can get started after 8 to 10 hours. You're still going to be learning along the way, but you can easily get started getting lists, finding people, calling your first people. So invest your time with that, and then do a business where your investment is primarily your time and effort, where it's not that you're putting out cash. Like if we talk about the house flipping business, and gosh, what do you want to do? You want to put out $200,000 for a junky house, put 100,000 into it, and then hope that it sells for 400,000 and hope prices haven't dropped? That's insane, doing that.
Yeah, it is.
Idea. And what I'd rather have you do is do a service business. So there are lots of the simplest examples of that. Dog walking business. You don't need anything. You need sneakers. That's what you need.
Mm-hmm.
You need sneakers. So, that kind of business, and, you're not going to make that kind of money, the kind of money here that you make, with that. But the point is that you want to look for businesses where your investment is primarily your time and effort and trying it. Your investment is not enormous amounts of capital or borrowing a mortgage or anything like that. It's just not the time to do that because we have too much uncertainty. Even if you completely disagreed with me, if you say, no, Bob, house prices are going up. I know it. I talked to my psychic. I called the psychic section, I'm sure. Or I believe the National Association of Realtors. That those guys are brilliant. Okay, great. I'll tell you that you can't be 100% sure. I can be 100% sure with overages. If I start calling these people, some of them will sign up and there's a ton of money to be made. Right. That I can be 100% sure of. And, I've showed you 2 counties today, 2 large counties, I'll give you that, but still 2 counties out of 3,000. And there are literally millions and millions of dollars sitting there. And we could just go page after page. Look at this one. Holy caramba. We're only page 8, by the way.
Bob, there's a lot of people in the chat that are saying they're asking how to get started. They're really excited about this.
Okay. Do you want to give them the information when they go and just I did a web class that you can go to and I really get in depth into overages. And today's call, I really wanted to point you to the fact that stay away from things with big investments and don't obligate yourself to big debt right now, and don't buy falling assets. It's a terrible idea. So DC, can you just give them the link where they would go so they can see the web class? So
there's actually two ways that you can get started. The first way is to attend our next live workshop, and you can get the information on that at overagesworkshop.com. That's overages with an S, workshop.com. And then also there's a digital course that you can study at home, and that is available at learnoveragetoday.com. Learnoveragetoday.com.
You know, to make it easier for everybody, I think this would be easier. Let me just go out of here and just put them up. And I didn't want to make a big deal. Actually, I'm not going to do that. I don't know if you want to put it up like on a slide or anything, the overagesworkshop.com and Learn Overages website. But
yeah, can you guys put that in the chat for everybody to see?
yeah, just put it in the chat. So, you know, I think to me that this is a great business because the helping aspect, that is like the number one thing for me. It's well timed. It's a good timed business right now. And this opportunity is not going to disappear anytime soon. This is going to go on for years because it's been going on. You know, tax sales have happened since the beginning of the country, since they had taxes. So this is not new. And it works in any market because there are always people that are losing their houses. But now is the right timing on it. And I can't stress enough, now is the time to accumulate cash and use that so that, you know, maybe you need to shore up your retirement account. You know, we have a lot of people that have been body slammed by the fall in the stock market. And again, that could fall further also, probably will.
Right. Yeah.
And, you know, the other thing I'll say about that generally, you don't want to be out of the market, because if you cash out and you, what they say, crystallize your losses or lock in your losses, the market, typically the stock market, when it does go up, it tends to jump. It's not like it goes up a little bit each day, a little bit each day. It has these jumps. And if you miss those jumps, then you never get back to where you were. So I wouldn't whipsaw yourself. Meaning, don't just immediately yank everything out of the market. It can be a really serious mistake to do that. So don't panic. Instead, what I would do is look to another source to replenish the money that has been lost. For most people, probably 25% to 30% of their portfolio. Look for something to replenish that, and be very careful about crystallizing your losses. Now, you may crystallize your loss and invest in something that you think is better. Like right now, a good friend of mine, John Malden, who's a well-known economist that you may have heard of. John is investing in oil and gas right now. Now, why is he doing that? Because we can't not have oil and gas. It's impossible. Our world it doesn't really matter what you believe. I can just tell you the reality. As I said, we always want to see the truth. The reality to it is that, you know, oil is here for now. Maybe in the future it will disappear. Who the heck knows? But the other thing is, oil is going to be used by developing countries forever, because they don't have the luxury of, oh, let's build windmills for $3 million a windmill. They don't have that luxury. So what smart people are doing, like John, he's doing an oil and gas play. You know, he's investing in that. I think so. With your stock portfolio, I think you can look at redeploying, like moving from one to the other. I wouldn't close it all out and go to cash, though. I think that you just lock in your losses, and, you know, I think that's not a good idea. I do think it's a good idea to do a business like this where you're replenishing the money that you lost, perhaps, and, you know, making yourself able to retire, making yourself able to leave a job that you're tired of, making yourself able to replace a job if you think your job is in danger, because for some of us, our jobs are in danger. And, you know, it's a recession when it happens to someone else. It's a depression when it happens to you, as Ronald Reagan used to say. And he was talking about, you know, losing your job. It's a recession when it happens to someone else. It's a depression when it happens to you. So, you know, maybe you're in that position where you want to have that backup plan. This business also can be started very much part-time. If you can devote 5 to 10 hours a week, you can make great progress with this business. You can get some deals, start bringing some cash in, and just work on bigger deals. That's all. If you're thinking, all right, I just want to do stuff on the side, work on some sizable deals so you can start putting some money in the bank. And then if the time comes when you're going to leave your job, maybe not at your choice, but because they're just doing layoffs, you'll be okay. You have your thing going already. And, it's just smart. It's just smart to do that. Get something cooking on the side. The other thing I want to talk about. So, DC mentioned we have both a live event and the home study course. So I want to say upfront, they both cover the same material. That's number one. They both cover the same material. It is a different experience to learn one way or the other. And for some people, they learn better at a live event. For some people, they learn better in reading. I personally like both. For me, I like the materials because I'm a quick reader. I'm a lawyer, so I tend to read quickly. I absorb the information well, and that's great. But I also, if I'm really interested in a topic and I really want to get into it, I want to meet the people that really know the business, be able to talk to them, get my specific questions answered, because I always come up with specific questions for me, like, oh, what state should I operate in? Or do I need an LLC? Or, this is my situation. What do you think? Or I was thinking about this approach. So I think it's a different experience. So for me, I like to do both. But if you're in sitting there now saying, well, which one is better? I don't think either is better. I think that they're both great. I think you can learn the whole business from either. And I would say just start out with whatever one makes you just feel drawn towards. It's a little less expensive to do the home study course. Not a lot though, because right now we have a special going where we're covering airfare and hotel. So I think it ends up not being that different in net expense. But you figure out for yourself. We do the event. It's 4 days long. When we do the live event in person, I'm there teaching. I bring the whole team. So we have people that are actually doing the parts of the business, teaching it. Like the people that get lists in our business, they teach the list getting. I teach the technical things. I teach like how it works in this county and that county, in this state and that state, how you do the claims, all that sort of fancy technical stuff that you'd expect a lawyer to teach. I do all those things. And it's just fun. We have a really good time together. It's 4 solid days. It goes from 9 every morning until 5, except the third day the final day when we cut off at 2 so that people can catch flights out. We run it Tuesday through Friday. That way everybody can be home for weekends. For me and my staff, and hopefully you, I'd like to be home with my family on weekends. I don't want to be teaching a seminar when I've got an 8-month-old at home and a 6-year-old at home that I dearly love and a wonderful wife. And I don't want to be away from them. So we do our events during the week. That's good for some people, not good for others, but that's the way that we do it. I think it's great because I think family is important and you need to put your money where your mouth is and be there for your family, which would include being home on weekends. So anyway, both teach the same materials. You don't have to have both. There are lots of people that do both. They'll come to our live event after they've bought the home study course. And I think that's traditionally, we've never offered the live event to someone who didn't have the home study course. And we used to think, oh, well, they won't have the background. But what I found, and this, I hate to say this to people, but it's just the truth. And this is all about the truth. What I found is that often people that would come to the live event would confess to me, like outside, like, I got the course. I always wanted to do it, but I never got around to it. But I know now is the time. And I want to be here because it's just, over 4 days, I can learn the entire business and I want to do that. A lot of people do that. So I figured out, wait a minute, there are people that are having success and really loving our event who never cracked open page 1 of the home study course. I'm like, oh, so then we experimented and we invited some people who hadn't bought the course, but were interested and they loved it and they got a lot out of it. So I figured out that you could basically learn it either way. You can learn it in person from my team and I, or you can learn it through the home study course. You do whatever fits your mentality. And I think they're both great, but it's both the same material. So you don't in any way need to come to both, because every once in a while we get someone that concludes, oh, you mean I have to go to a live event? No, we don't have to go to a live event. Do whichever one works better for you. And we have a lot of fun together. The events do sell out. That's the other thing I'll tell you, because we limit them. So we limit them to no more than 100 people, including guests, partners. So, typically we have 50 to 60 businesses represented in the room. And it's, 100 people is max. That's all that we will do, because I want it to be a personal experience. I want you to be able to ask me questions, ask the staff questions. You can't do that with hundreds of people. So we absolutely cap it off. So again, typically 50 to 60 businesses and no more than 100 people. So that's that part. Hey, DC, any questions that you're thinking if you're looking at them, or I'll see if I can.
Yeah, let me pull them up.
Yeah, pull them up.
So this is it, folks. the recession, this is the best way to prepare for this recession in today's market. Overages gives you that amazing opportunity that anyone can take advantage of in any economic climate, not just today's market, but it works all the time. The recession just creates more opportunity to help more people and do very, very well for yourself in the process. Now, if you're already in real estate, it's a perfect business to add to your existing business or replace risky strategies like fixing and flipping or buying and holding and renting. Just work at it part-time. Follow the systems Bob has set up for you. In a very short time, you'll be getting your own overages checks and you'll be one of his success stories. So the two links to get started is overageworkshop.com. You can grab a seat at Bob's next live workshop, or the digital course is learnoveragestoday.com. And if you have any specific questions or prefer to sign up by phone, you can call 1-800-757-1462. That's 1-800-757-1462. You can put that in the chat too. I'm seeing a bunch of questions that are similar related. So I'll just read a couple of them. Overages is legal in my Colorado counties. What about states that do not give you online access? I live in South Carolina and everything is done at court buildings. And then similar question, the list for my county doesn't have those big numbers, mostly between 1,000 and 5,000. You want to comment on those?
Sure, absolutely. So the first thing I would say is don't limit yourself to your county. I know that's appealing to everybody. Like, oh, I want to call my neighbor and tell them they're owed money. Sometimes your county is not the best place to do it, but we're doing all of this by mail. We're sending out a notary to get the sign up done. So, and by email and phone, we never have to meet with our clients. So we're always doing this by phone, and you're going to be doing this by phone, internet, email, and US mails. You don't have to in any way limit yourself. Now, I will address those specific places. So Colorado sells your house and keeps the change. I do expect that to change. There's a Supreme Court case that's being heard this year that I think will be decided, saying that the couple of states that don't give the money back, like Wisconsin and Colorado, I expect the Supreme Court to say, hey, you can't just steal people's money. You can take the money that you're owed, but not the rest. But other than that, right now, Colorado doesn't give the money back. They just keep it. It's terrible behavior, but that's what they do. And, one of our most successful students is actually from Colorado. He operates from there, and he's making mid six figures, like 500,000, 600,000 a year. He's been doing this for many years. Great guy. And he lives in Denver. And it's because he just picks up the phone. So don't limit yourself. South Carolina, the lists are actually online, although you should send someone down to the sale. We should pay someone to go to the sale just to harvest the lists that way. We get into that in the course. I can explain all that, but the lists are actually online, but you don't want to use them. And again, I explain that in the course, but in South Carolina, there are a lot of overages, but your list getting is different there, but there's lots of money there.
That's great.
There's another state someone asked about. Was it that you mentioned? Or maybe I was reading it.
I think the point is that don't limit yourself to your own county or your own state, because you can do it nationwide and you can do any size deals that you want. Diana, go ahead.
Let me expand on that slightly. So where you're going to find the most overages is in places with bigger population, because the person saying, oh, my county has, a small number of leads, they're $1,000 to $5,000. You probably live in a less populated place with less expensive real estate. And you also have less real estate. The houses that are lost at tax sale are a very small percentage of the total houses in a county. It's less than 1%. It's like maybe a quarter of 1% in a given year. I don't know the actual numbers, so I don't want to misrepresent it, but it's a small, tiny percentage. So because it's a small, tiny percentage, you want to be in a place with a good sized population. When you're talking about, like we're looking at Fort Lauderdale, you see there are 35 pages of leads. Fort Lauderdale is a big city. DeKalb County is a part of Atlanta. So we looked at that. That is 5 pages of huge numbers, millions of dollars worth of lists. You want to look to the bigger places because that's where there's enough housing stock that houses get sold. Lots of houses get sold. Lots of overages get generated. and that's where your money is. So don't limit yourself, because I do understand where it comes from. Like, you're like, oh, I feel like I could establish rapport with someone if they were my neighbor. I think that would be a tiny bit easier. It would be great, but it's not necessary. Don't limit yourself, because the opportunity is here. And by gosh, you got to take advantage of it. Don't let this slip by. And it doesn't matter that they're not in your neighborhood. It would be like a slightly better. It would be nice, but it's not at all necessary, because we're doing it all remotely.
Yeah, and you don't need to visit the property, so they don't need to be local.
Correct. And you don't have to deal with the property. You said, well, Bob, you're talking about working on real estate that wasn't in your area, that's in better areas. I don't want to travel. I agree. That's, if you don't want to do that, you don't want to manage those deals, don't. But this isn't that. This is just money that gets mailed to you in the form of a check. You don't have to hire any contract or anything for that. You just got to hire
your house.
Right. You just need UPS or FedEx or US Postal Service to deliver checks. That's it.
Perfect.
And then check you send out.
There's two similar questions. I'll ask them together.
I'm gonna just go over here because it's getting darker over here. So I'm gonna go hang out over this way.
Okay.
Okay. Okay, that's better. Can you see me better?
Yeah, it's good.
Okay, good. It's hard sitting.
Yeah, I hear you. Diana's asking, do I need any license to do this kind of job? Another similar question is, do I need to have any experience in real estate to start doing overages?
This is two great questions. You do not need any like degree or certification or anything. There's nowhere literally that you have to get certified or like a government license or permit to do this. It's a really, I'm sure if they ever really get it figured out, they'll find some way to make us get a permit or something. But no, you don't need any licensing. Like, you don't have to be a realtor or anything like that. There are a few isolated circumstances where we don't work with them. Like, for example, in Florida, so I saw someone asking how long is the money around there. Florida, you can work it for about 1.5 years. And after that, the money moves to the state. And when it's with the state, meaning the state treasurer, then you need to be a Florida attorney, CPA, or private investigator. But while it's held at the local level, there's no requirement. So that's a really great time to do it. And I would just tell you, because we have really thorough research, and the research, I say, do it within the first 1.5 years. If it leaves the county and goes to the state, don't do it all. Just move on to your next lead. There are always plenty of them. So you don't need any certifications. You also don't need any real estate experience, because it's not real estate. This is just money that's generated from real estate that got sold. But if you have money experience, like if you have a wallet or a checking account, I think that's enough. That's just a joke, by the way.
Yeah. Greg is noticing a lot of your success stories. So he's asking, I see all these people signing up for your overages blueprint. Won't everybody have the same list, and won't all the opportunities be gone soon?
That is a great question that many people commonly have. And so I'll tell you two things. One, just looking at these lists, you can see that there's in no way is this at all. And I'm gonna look down at the list. Look at the page up now is all 2019 leads, and look at the size of them. And I think, let's see, I don't know if this may be arranged by date. Like these are going back, we're going back in 2018 now. Right? And this is money that's all, by the way, with the county, so we can go grab it. So they appear to be holding on to it for an extra long time there, which is fine. As long as it's on this list, you can go after it. But we're only on page 14 and we're back in 2018. Look at that.
That's only one county. How many counties are there in the country?
Now there's a little over 3,000 is the number.
Yeah. So
3,000, I think.
There's no way that there won't be any opportunities left, especially because the foreclosures are multiplying right now.
Yes. And also that would be in the such far distant future. By then we could all be millionaires. Everybody in this call could be a multi-millionaire before you didn't have to worry about it. So it's not, this opportunity is a long runway, and everybody does not get the same list because it's, people randomly pick from thousands of counties where they're going to do business. So there's just there's no way that you're going to run out of leads. That's just not going to happen. Not maybe 10 years from now, I guess it's possible, but we'll all be retired and rich and living on private islands by then. So it doesn't, maybe not that, but we'll be all be doing fine. And,
yeah.
And I wouldn't at all make that a reason to not do this. And I do understand it's a valid question. That I do completely understand. But the other thing, I'm only showing you in this case, tax foreclosures. You can use our system for mortgage foreclosures if you want to. And that's, that doubles the size of the pool. So,
Right. Yeah.
It's just, that's a great question, but don't worry about that one. The other thing, and I'll tell you the other dirty truth that I wish wasn't true, but just is just true. So, I'm just going to tell you, many people, just like many people join gyms this time of year. And then if you look in March, there are not so many people in the gym, especially newer people. This is the same thing. Lots of people go and they're like, I'm going to do it. I'm going to do it. I'll make time for it. I'll make time for it. And then they don't. They have the best of intentions and it just doesn't work out that way. And, I'm not here to criticize them. We all have complicated lives, but it's just the truth of it. So lots of people get started. Lots of people never make the time in their life to make it happen. So, it's, even though many people could come to a live event or buy a home study course, only a few of them actually implement, do it, and keep to it. It's just the way it is. And it's just, I know, DC, that you own a gym, so you know this.
Yeah, I do. Firsthand.
How many people sign up in like January? Just out of curiosity, like as a percentage of your signups, what's January look like?
Oh, it's huge. It's like 10 times any other month.
And how long are they usually lasting? Like how long until they're not coming to the gym?
Yeah, like 3 months.
Yeah.
I have this video that I use for the gym's marketing that says you don't need a New Year's resolution to get healthy and fit.
And it's a shame because they're great benefits. Like everybody that goes, even if they don't do a great job working out, even if they just do the treadmill for 45 minutes or half an hour, they'll get some benefit.
Yeah. Yep. You live longer and you live healthier.
It's a frustration for everybody in the teaching business. We really want everybody to succeed, but everybody won't make the time in their lives or do the commitment. So
right.
That's just
Tom is asking, what is the fastest way to get started? Should I get the course or go to the live workshop?
I get the digital course because the course is digitally delivered. It's accessible. Like as soon as you buy it, you get your receipt has your user ID and login, and off you go. So that's the fastest.
Okay, great. The person is asking if someone asks you where the money is coming from, what do you tell them?
Oh, that's a great question. So here, I'll give you my answer. I just want to check with the DC because I'm not sure if it's picking up the microphone from this camera or from the board. Can you hear me clearly?
Yeah, it's not as loud as it was before.
Okay, I'm going to just kneel down then because I think it must be picking up off the board on the computer. So,
yeah.
So here's the answers. This is a really great question. This is a good one. So what I'd say it was you that I'm talking to, DC. I would say, hey, DC, that's a great question. And, right now I can't give you all that information because this is someone's private information. We think that it's yours. That's why I called you. But until I have a notary go out there and just verify your ID so I really know I'm talking to the right person, I can't give you the information about, all the information about this, $100,000 that we're talking about because it's someone's private information. I'm happy to give it to you after you meet with the notary. Then I can share all that, but not until we know we're talking to the right person because it's somebody's private information.
Well, that's an excellent answer. Yeah,
So
that's great.
And, it shows you respect people's information because this stuff, although it's sort of public record, unless you know what you're looking for, you'll never find it. Like you have to actually know where to look, go manually look through. Like, can you imagine Broward County is 35 pages and it doesn't even have the names on it. You have to actually go through a process to convert this part to a name, which we teach you. It's pretty easy to do, but no one could ever look up their excess funds here. They look at that thing and like parcel number, it's some cryptic code. It may as well be an Egyptian.
Right. Samantha's asking, do you cover all the different states in the course?
Yeah, so we have 50 states worth of research. We cover a couple of states where you can't get the money, which is Colorado, Wisconsin, Illinois, New York State for the most part. There are a few places that will give it back in New York. And there's one more I'm trying to think of which one it is. There's one little state that I'm just slipping in my mind at the moment. But we cover all the states, including those as to why you can't work it there. And and those you could work mortgage foreclosures as an alternative because it is available in that. So even in Colorado, a place like that, you could do the mortgage overages. But in any event, we cover all the states. We give you, the list of recommended states because some states are better than others. Some states have, just more overages, easier to work. We give you all that really insider knowledge. As a matter of fact, that's my first presentation on the first day. I spend from 10:30 in the morning until 1 o'clock that afternoon, going through literally state by state, how to work it in each state and which ones are the best ones. So I give you all that. So I don't want you operating in the dark because we've been at this business for a little over 10 years and we figured all this stuff out. So the least I can do for you is make sure that you get all the best information.
Wonderful.
And by the way, that's also in the home study course. Look in the quick start manual. That's where the summary of that is. Quick start will tell you the best states, and the 50 state guide will give you the research in every state.
Excellent. Let's see.
We'll look at some questions too here.
Yeah.
Here's a cool question. I'll just answer up. So Mark Barnhill said, how do you find people who have been forced to move due to foreclosure? These days, as I think we all know, privacy has gone the way of like an extinct dodo bird. There's just no privacy. So there are very easy to use websites. The process is called skip tracing. Basically, you put someone's name in and the address of the property lost to tax sale, and 60 to 70% of the time in your first search, their current contact information comes up, including their Facebook address, including their email address. Let me stop this from me. Everything is there. It's just they're an open book. Their cell phone number, their home phone number if they have one, often their work phone number. So it's gotten really easy. And that used to be hard. Once upon a time, it was a lot of work. But these days, because the biggest companies in the world are nothing more than like data gatherers and sellers, it's really easy. So we give you all that training. It's really like that's gotten so simple. It's almost scary how simple it is. But it is.
It is. Yeah, it is. I've got one here. Clement is asking, so typically people do not complain about the percentage they receive?
No. And you know what the funny thing is? And I'll just tell you, you guys will really be insiders. The bottom line is they never actually think they're going to get any money. It's really weird, but their thought process is basically like, I talked to this guy, he seems like a nice guy, but I have such bad luck. I almost feel sorry for the guy even trying to help me because I have such bad luck. I'll never get this. I'll never get this money. And they don't even think you're a scammer. They just think that their bad luck is so overpowering that they're never going to get anything. So negotiating over the price is the last thing they're thinking of. They don't even think they're going to pay that. And
Wow.
so
Yeah.
it really is rare that anybody ever complains about that. Super rare. And I know that's weird, but that's just the way that they're thinking. And, it took me a while to figure that out, but they don't think it's real. They'll still try it. Like, it's like, oh yeah, I'll take the lottery ticket. Okay. But they don't actually think they're going to win it. So that's the truth of it. And you'll also run into this on those occasions when, like, say you get the wrong person, same name, wrong person, and you tell them, oh, I'm sorry, we didn't get the money. Or if a mortgage company shows up and takes the money, which can happen, we go over how to deal with that. Usually we end up with half of it anyway. But when things don't go perfectly, the people usually are just not at all surprised. Like, yeah, I knew it. I didn't think I'd ever get this money. And they don't even get mad. I was surprised. The first time I'd call someone like that, I was like, oh no, I don't want to make this phone call. But in reality, what happened is like, yeah, that's what I expected. And that was a surprising fact. So they're not big on negotiating. Occasionally get someone who is, and then we talk. And if it's worthwhile for me to do it for the money they're proposing, which of course that's related to how much is the overage, like is it a big one or a little one? Are you owed 100,000 or are you owed 20,000? And that'll control, how interested I am in doing it for the smaller amount of money. And you do some and you don't do others, but I would say most of the time there's really no negotiation. It's just they accept that that's your price and they and you move forward. And also they're not typically getting calls from other people. That's the other thing that happens here, that generally speaking, you're the only one calling them. And even if someone else did call them in the past, this is generally the conversation. They go, oh, I got a call from a woman about this like a couple months ago, but she never called back.
Oh,
It happens so much. And here's what I think actually happened. I think actually they were all grumpy butt towards the person that called. Like some woman called and they said, I'm not interested. I don't need any money. And they hung up. And so the woman was scared and like, oh, that guy's a jerk. I'm not calling him back. And that's not the way, the person tells you the story, but I think that's actually what happened. But in the meanwhile, they've been curious the whole time. They're like, I wonder if that's real. Oh, I could really use money. Do you think that was a scam? Oh, I don't know. I don't even know. I didn't keep that woman's number. So I don't even know. And they're just wishing somebody will call them. So when you're the second person to call them, oftentimes you're greeted relatively with open arms, like, oh, somebody called me about this. This is great. Tell me about it. It's really funny.
Yeah, that's amazing.
One lesson there is follow up. Don't think you have one conversation and they didn't buy and you don't call them again. Be nice, just cultivate the relationship. Ask them about their dog, ask them about their kids, do all that.
Yeah. I heard on a interview with Janet Walker, who is one of your graduates. She's made over $3 million in this business. And she said she likes the bigger deals, not just the bigger deals, but she likes the deals that are harder to find because nobody else can find them. Nobody else is calling them.
Yes. Hold on one second. One of my people is here. Yes.
Ava's trying to call you.
Well, I guess this proves that we're live.
Yeah, it's not 6 yet. I'll be.
Yeah.
Oh my gosh, you have to go at 6.
Yeah,
Okay.
yeah.
So we're gonna go inside and we are gonna be babysitting. This will be fun. This will be the first time ever. There's both a babysitter and so you get the inside story of Bob Diamond's life.
This is amazing. Bob's giving us a tour of his house. Bob's giving us a tour of his house now. That's amazing.
And I'll give you a tour.
Does anybody have any other questions? Type in your questions if you want Bob to keep answering questions.
And yeah, you'll get to meet Valentina. Let me show you Valentina.
Oh, she's so cute.
Hey, sweetie. Somebody's here. Hello. Can you say smile? And there's the dog. Who's not
Kita.
do you like I'm talking to people right now. So what I'm going to do, how about if we do this? I'll feed you and I'm going to talk at the same time to people. What do you think about that? Well, at baby camp for a minute while I sit down. Is she still eating?
Yeah, she's still.
Okay. So here's what we're going to feed her. Teethers. This is what we're going to be feeding her. And meanwhile, I'll answer questions for you guys and I'll let you watch the teethers for a second. Hey, sweetie, would you like this?
Well, this is a treat. Everybody is saying how adorable she is. She's beautiful.
So. I think she's pretty cute. I think she looks like me too. You want to let's take a poll.
Yeah, I think so.
We have similar hairstyles, same eyebrows, very much matching, same blue eyes. You enjoy.
Oh, she's snacking. You hungry?
She's loving this. So
same hair. Kathy says same hair.
Yes, you do. God. Beep, 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 beep. And I'll show you one last thing, just because I can't resist. You know who's here? The nose beeper. Beep, 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 beep. All right. Enough fooling. Get over it just to talk about.
All right. Wayne is asking when and where is the next live class? What is the cost to attend? So Wayne, you can see on the screen this website address, overagesworkshop.com, is where you get all the details for that. There's a lot more details than that on the page. So you can go over there and get all the details of what you're going to get when you go to the live workshop.
Yes, sir. And yeah, you can see exactly, see what you get, what it is, all the costs. I know right now we are doing a special, which is we pick up airfare and hotel. So that's a pretty good deal. It's airfare and 4 days hotel. And so that you have to take that into consideration. So go look. And you learn the whole business in both formats. It's just, how do you like to learn is really the question.
Marin is asking, does the course show us how to get the contact information for the people?
Yes, both course and live event, because that's critical. I mean, you have to get their contact. So you're going to have their email address, their phone number, everything. You'll have everything that you need to contact them, whether you want to contact them by social media, like ping them on Facebook, or whether you want to just pick up the phone and call them, which is generally the easiest thing to do. Or whether when I send them a letter, all the contact information is there. There's just no privacy anymore. Believe me, you just put someone's name in and they just show up. So
Janet and Anya have a comment for you. They say, thanks, Bob and team. I attended the live event last year. Such a great and trustworthy team. Unfortunately, I hadn't started yet because she had 4 surgeries. Wow.
Oh, no.
But I dusted off the program and got re-energized by this chat and can't wait to jump in this week. Blessings, Janet.
That's great. And I'm so sorry to hear about your surgeries, but it sounds like you're hopefully doing better and you're going to go and you make something good happen.
Yeah, absolutely. Fresh start. It's 2023. Everybody gets a fresh start. And the best way to get your fresh start is start doing overages and stop doing risky strategies.
And also stop watching cable TV.
Yeah.
Grumpy. That's all. Makes everybody depressed and grumpy.
Mm-hmm.
And one of the points, one of the points I was going to say today is that when you watch the news, everything's hysterical, and all they're trying to do is get you upset so they can sell your attention to advertisers. And the proven way to get your attention is with hysterically bad news. Overstated, overblown, and bad news. And it's just not right. And you shouldn't subject yourself to it. It's not a good idea. Spend your time on some positive things. Even spending your time with your family. Like it's way more like I can play with, my daughter here and hang out with her and my blood pressure goes down. I watch people, no matter what channel, my blood pressure goes up. And all they're doing is I'm playing their game. They're just trying to sell me as a target for an advertiser. And you're so much better off doing something positive, whether it's exercising, doing overages, anything. And I think overages to me is going to solve the problem of the bad economy, because that is no joke. The economy is going to a downturn. It's hard to tell how bad it's going to be, but it shows every sign of being very serious. And we're not in a good position as a country right now. But you control your own personal destiny so much more than anything a Fed chairman does or doesn't do, or any politician does or doesn't do. And that's where we got to take our power back and be powerful, take action. And powerful people take action. They don't sit there and wait to get run over by the bus.
Exactly. Trell is asking, how are we, the students, paid? I want to do this.
So what happens is the county will send the check to you. You then deposit it in a business account. And that's typically what I call a holding account. It's just a regular business checking account, but you deposit the check there. You take the expenses, you reimburse yourself for the expenses, whatever they might be, even if it's just $65 to send the notary out. It might be that small. But you reimburse yourself for whatever expenses you had. And then you send them, of the remaining part, you send the client 60% and you keep 40%. So it's really simple. It's nothing complicated. And I just think it's a separate account. Like you have a separate operating account for your business that you pay your day-to-day bills. And then you then keep their money in a holding account. It's pretty simple, nothing complicated about it. And you have written permission, by the way, to deposit that check and cash it. One of the components of this is a power of attorney that gives you the authority, the legal binding authority to go present that claim to the county, go get the money, and go cash the check when you get it. Take the baby out here.
Yeah, so just so everybody's clear, and if somebody doesn't have a business or legal entity set up yet, you recommend that they set up something to get started with, like an LLC or something.
You can make your first calls without doing that. It's not a business where people tend to get in a lot of trouble.
No.
It's just not, it's not a risky business. I'm just gonna put this down over here. It's not a risky business. And because of that, you want to get that stuff set up mostly because it makes you look more professional, not so much because there's any risk. It's like, if people don't get the money, they're not suing you. They're not surprised. They think that was what was going to happen. That's number one. So that's their expectation. So the only people I ever see getting sued in this business are fraudsters who do things like make up fake IDs and turn in fake claims and try to steal other people's money. And that's the only people I ever see get in trouble.
Wow.
And I've seen that a few times. It's terrible behavior. You're like taking the down and out widow and orphan and stealing their money. And that's
awful.
They should be burned at the stake. It's
I
absolutely
don't
terrible.
understand why people do some things sometimes. That's crazy.
It's
Arnold is asking, can the client call me back on my personal phone?
sure. Why not? That's usually most people use their cell
Cell
phones
phone?
for this
Usually
business.
people use a cell phone.
Yeah, because these days it's no surprise. Like even these days, like just take, for example, I'm here doing this wonderful thing. And all of a sudden, our nanny leaves for the day. My wife isn't home yet. So I get the baby. No one's that surprised. Like this stuff happens. I'm not even stressed about it.
That's
Like,
real life.
If it was 3 years ago, I would have been stressed. Like this is so unprofessional. Now, like, hey, my daughter, this is Valentina. By the way, Valentina, is her name. My little sweetie. So
She's beautiful.
life is changed that way, where you can use your cell phone and nobody's surprised. If the dog barked, if my dog barks here because she's big, nobody's surprised. It becomes a talking point. Someone may say, oh, what kind of dog is that? It's great if they ask you that. It's fantastic.
Yeah, right.
Because then it's like, oh, I have a German Shepherd. And, most people, if they're dog people, are interested in any kind of dog. Like, oh, I used to have a German Shepherd, or my cousin had one, or whatever. It's just the way it works.
Yeah.
So
Kelvin is asking, is there a monthly payment plan?
yeah, there's a payment plan.
So yes.
Yes, there is. It's what, $497
It's
for 3 months?
$14.97 for upfront, or 3 payments of $597. You can get started for just $597 today at learnoveragestoday.com.
All right. And you also get the full course. Important note. Like, we don't hold anything back. It's not like you only get like no access till it's fully paid. We trust you. You can do great.
You get the whole course on the first payment.
Yes.
How do I find notaries in different states?
Oh, there's a website, 123notary.com. Really simple.
That's pretty simple.
Yeah. And like, I have no association with them. It's just, they seem to be an advertising site for notaries. You just put in the zip code where your client is, and they'll have someone close by, and then just reach out and say, hey, can you do a sign up? And then you send them the papers. Really simple. Notaries are wonderful. They're like just on it. They're typically people that are like realtors with little side gig doing notaries. Half the realtors do it because they just want to meet potential people that might list a house. So they just have that as a little side hustle they do. And they're good. They just get it done. And also there's a new thing, which is online notaries, which we had discovered during the pandemic because we had to. So there are people that will notarize now, meeting people over Skype or Zoom or any of the online things, because that's, someone like holds their ID up.
Okay. Yeah.
Someone holds their ID up to the camera. The notary takes a screenshot of it, and then someone has signed it by DocuSign. So they sign it digitally online, and it's perfect. So you can even do that. We usually send the notary out because a lot of our customers are not particularly tech savvy. Right. The older people. Yeah. And it's just, when you send the notary, it brings it more, it's more real to people. It's less of it's just someone I met over the phone that's a scam. Instead, it's a real, authorized state licensed notary.
And it's easier for them, and it's in person, so they feel like they trust it more.
Yes. It's real.
Eddie's asking, we were just talking about this, but Eddie's asking, is there a contract agreement or some form of agreement that you have?
And in both formats, in the live event and the home study, we give you all the contracts that you need. And they're really good because we've been working this business, like I said, for more than 10 years. And, those are really well, like, I want to say experienced. They're battle proven. I mean, they've been You know, they've been through many iterations till they got to where they are today, and they're perfect. They do exactly what needs to get done. They secure the deal. They're easy for people to read and understand, which is part of the importance of it. And they protect you, and it gives clarity to everybody where they know what they're agreeing to, you know what you're agreeing to, and it's all just clear. So we give you that whether you come just to the live event or if you get the home study. Either way, you get electronic copies of everything, so you can use them for your business.
Awesome. Freddie says, yes, I've used the online notary for a real estate deal. It was awesome and easy. Yeah, I mean, even if you're doing like assignments virtually, it's perfect.
We had a claimant, we did one of these recently where she had moved back to Pakistan. And so my team found her, and these days with social media, you can do it. It's not like it's not findable anymore. So we were talking to them, they're like, oh, how do I, are there notaries in Pakistan? And the answer to that I gave them is yes, at US embassies and consulates, but you don't even need to do that. Just have them meet with the notary over Skype or WhatsApp or, any of those things.
Yeah, exactly. We've got a couple people on from Canada. Is this possible to do this business from Canada?
You can, and the one trick with Canada, well, there are two. One, don't use an LLC as your entity because the Canadian tax folks, for some reason, tax LLCs very heavily. So you're just going to use US S Corp. So that's easy enough to set up. Also use a cross-border bank like TD Dominion Bank. There are one or two others that are Canadian banks. I use TD Banks, I know this. You can open up a US bank account even if you're in Canada, because TD Bank is both in Canada and the United States. So that would probably be the bank you would use because you're going to have a lot of US checks you're depositing. And the other thing is you're going to want to use a voice over IP phone so that you have a local area code. So for example, if you're doing claims in Georgia, you'd have a Georgia area code. You could do that with one of the phone systems like Ring Central, or I think one's called Grasshopper or 6x6 Communications. They're very cheap, very inexpensive, and most importantly, they let you have a local phone number. So people won't say, why are you calling me from Canada? Instead, it's local. So,
yeah, it's so simple to get a local number now.
It is.
Yeah.
It's really simple and cheap.
Well, I think after 2 hours and 15 minutes, I think you've given us enough time today, Bob.
I got stuff to do.
So we're gonna let you go, be with Valentina, and get something to eat. And you have anything that you want to say in closing?
Yeah, I think hopefully that this was helpful to everybody. Hopeful in clarity. Don't get derailed and depressed. It's really just remember the press. What they specialize in is making people upset and hysterical because they're competing, for clicks. And that's just what they're doing. So you really have to just keep that in mind and not let yourself get derailed, because there's no reason for your personal life to be derailed. The economy is going down. There's no question about it. So it means you change what you do and you do things that are smart in the current environment, but don't get depressed or anything. Just work at it. It's like, I would think, DC, if someone came into your gym and said, I'm fat, I'm unhappy, I don't like the way my body is. If they would work at it, you could fix it, right?
Yeah. If they do the work and follow the plan, the results happen.
Yes. And this is exactly that, but in money.
Exactly the same thing. You got to follow the plan and it'll happen. If you don't follow the plan or you don't do anything, nothing's going to happen.
Correct. And anybody can do it is the other thing. Like everybody couldn't be a professional bodybuilder, but everybody could look great in a gym. And everybody is not going to be, Janet Walker making $3 million, but everybody will do great. And the more work you put into it, the more great you'll do.
Yeah, exactly.
So
well, Bob has given you an overview of the economy and the real estate market for 2023. And he's also shared with you the best opportunity to leverage the recession in your favor so that you can thrive while everybody else is trying to survive. And really, you don't have to worry about, once you start this business, you don't have to worry about ever, working another job or getting laid off during the recession, because you'll be confident that you can support yourself and your family by just doing another overage deal. I mean, Bob showed you that one deal is $100,000 is your share. So, how many of those would it take to replace your current income?
Exactly. By the way, the whole family's getting here. You get to meet the whole Diamond family, I think.
Oh, okay.
Hey, Remington? I'll come to Three Kings. We're just hanging out. Come say hello for a minute. This is my beautiful wife, Eva, who's there. She is. Hi. This is
Hello.
We're talking. That's DC.
Oh, DC, finally.
Hey,
I've heard about you so much. Oh my goodness.
you've got hundreds of people on here meeting you now.
Hello.
Oh, no, hundreds of people. We are celebrating Three Kings in Puerto Rico. So
Oh, awesome. That's amazing.
Three Kings.
Yeah, it's Three Kings Day. And I don't know, Remington, where's he in the bathroom?
Remington just went to shower.
Oh.
He is
Oh.
one
So
big messy kid.
So we're not gonna, he's probably just out swimming. So anyway, that's another part of the Diamond family. So
Yeah. Well, thank you so much, Bob. We
Thank you.
appreciate you sharing all your wisdom with us today.
and you're very welcome. And, I look forward to meeting some of you guys at the live, event, answering your questions and support for when you buy our course. And just hearing about your success. That's the most fun part for me, is hearing how you're supporting your family and yourselves. Because at the end of the day, it's about supporting these little ones that we have, your grandkids, your kids, and supporting them the way that you really want to. And this is a business that can allow you to do that in something you're really proud of. Like when she gets older and I explain to her what I do,
Mhm.
we help people who've lost their house get money back and get restarted in life. I can be proud of it,
Yeah,
Same thing when something
absolutely.
gets done. It's something,
Absolutely.
the point of pride, and we can all have that. So, all right, I'm gonna run because I
All right,
think
we've got to let Bob go. If you have any more questions, you can call the phone number on the screen, 1-800-757-1462, or go to the one of the links to enroll. And there's also a web class. If you want to get a full overview of the 5-step system that Bob shares on the web class, go to taxsaleblueprint.com/live. Thank you, Bob. Bye,
Bye,
everybody.
thanks, guys. Ciao. Say bye.